Before we get into that retail SMIS conversation, I'd like to first get a sense of how the market has fared this week so far.
Hi, how you doing? Good afternoon. Well, the market was quite active this week. We had quite a lot of events this week. The market opened with the banks anticipating a debit for CRR based upon the increase of the CRR ratio from 22.5 to 27.5 at the last MPC meeting on last week Friday. So banks were expecting a debit. We also had an OMO auction on Thursday and a PMA auction where PMA we saw at the PMA auction we saw an increase in the Treasury bill 1-year rate from 5.09% to about 6.15%, as against what has been happening for the past 2 weeks. Then in the for the OMO auction, we saw a marginal decrease in the 1-year paper from about 13.12 to about from 13.09, a slight reduction. We also saw for Thursday we had net maturity of about 300 billion into the system, so the system has been rather fairly liquid. Then yesterday we experienced we had the anticipated CRR debit, about 220 billion was moved up from the system, but all in all the market has remained fairly liquid. Today, Friday, we're expecting to go for the biweekly CBN retail auction, and we expect liquidity to further dry up based upon this auction, and rates go slightly higher as we go into next week.
All right, now, interesting breaking it down from the PMA auction to the OMO from yesterday and also the CRR debit. But I'd like to get a sense of how you think this CRR debit situation is going to continue going into the next month.
So essentially, I mean, what that means is that for every new deposit that banks would get, they will have to pay another 27.5% as CRR. I feel banks are mindful of this, and it might lead to a slight increase in rates in the money market, but not astronomically, not like what we had before. We still believe the low interest rate regime will still continue. We also believe that banks would also look for how to maintain their costs when it comes to funding.
All right, now let's get into the Treasury bills market now. Looking at how from the primary market auction we saw earlier in the week, I'd like to know how you see yields trending, so far, and where you see it playing out next week.
Well, before now we've been seeing yields in the primary market, especially the 1-year paper, trend downwards. This week was the first time in a long while where we saw rates go up slightly. I think it's too soon to see if it's a reversal or if it's just a one-off. I think if we look at the next 2 auctions, we're able to see if there's a particular trend, if rates are going back upwards. But it's still a bit too early to indicate any pattern or trend right now.
All right, but are we seeing more activity at the shorter end of the curve or towards the medium or the long end?
It's mostly at the long end of the curve. Because that's where you still have the highest yield so far. So it's mostly at the long end of the curve.
All right, but from yesterday's OMO auction, I understand there's still some unmet demand. I'd like you to talk me through what's been playing out there.
So yes, so we had quite a lot of interest in yesterday's OMO. However, the stop rates came out way below what people had bid for. So there was quite an unmet demand. So we expect that traders will go to the market today to try and see if they could fulfill any. They could buy more OMO securities to fulfill any unmet demand that they had from investors yesterday. Because we did see quite a lot of interest in yesterday's OMO auction. We had a lot of internationals coming asking for the auction.
All right, but very quickly, I'd like to just get a sense of the level of foreign participation we're seeing, especially at the I&E window.
So we have the I&E window. So this week we had quite a lot of interest in the I&E window. We saw a lot of internationals come in to sell USD to try and take part in the auction. So we have increased liquidity in the FX market this week compared to where we were last week. Although we still see rates at a bit higher level at about 364.6. However, we believe this would come down as more interest coming in. We're seeing more flows coming into the markets.
All right, then, B, I'm afraid we have to leave it there for now. We'll keep our eyes on this market and definitely get another roundup much later in the day and find out how the markets will close later today. I'll be speaking to Biyi Ogundepo. He's the head of Treasury Coverage at Access.